program on goods and services tax. This is being organized by the GST and Indirect Taxes Committee of the Institute of Chartered Accountants of India and being hosted by the Ernakulam branch of SIRC of ICAI. The faculty development program is being done for the faculty members and research scholars in commerce and management of School of Management of Business Management and Business Studies, MG University. I would like to recognize the presence of the chairman of Ernakulam branch of SIRC of ICAI, C.A. Ranjit Arwariyar, the immediate past chairman of Ernakulam branch of SIRC of ICAI, C.A. Roy Verghese, the representative from MG University, Dr. Soman N.L, for this program. Today, on day 4, we will be having deliberations on input tax credit, the eligibility and conditions, apportionment of credit and block credits, and reversal of credit, returns filing, utilization of input tax credit, and payment of tax. And to talk to you about this, we have a very eminent faculty with us, C.A. Soman N.L, FCA. Soman sir is a practicing chartered accountant with an area of specialization in indirect taxes and GST. He has had the rich experience of working with public sector undertakings like Messrs. Bharat Petroleum Corporation Limited and Messrs. Kochi Refineries Limited. He comes with more than 25 years of experience in handling indirect tax matters such as central excise, customs, import and export, service tax, cess, foreign trade policy, and now the goods and services tax. He is also the convener of the study group for goods and services tax in the state of Kerala, constituted by the Institute of Chartered Accountants of India, New Delhi, for the period 2016 to 2019. He is a faculty and trainer in GST for various stakeholders of ICAI. Sir is a speaker in study circle meetings of professional bodies and association. He is also a faculty for the training program for Excise Commissionerate officers and the Indian Air Force, which is being conducted by the ICAI New Delhi. Sir is also taking classes for the CA Intermediate, which is IPCC as they call it now, and the final courses at ICAI branches. He's been a speaker at more than 100 seminars on GST for the trade and industry, tax professionals, colleges, and other students in and out of the state of Kerala. With these words, sir, may I welcome you to kindly commence your deliberations on input tax credit. Over to you, sir.
Thank you, Deepaji. I think you have read a lot of things more than what is required now. Okay, right. Right,
my
sir.
pleasure to introduce you well, sir.
Thank you, sir. Thank you. Respected Chairman Ranjit sir, then Roy Verghese sir, Secretary Deepa Verghese, then my dear respected faculty audiences. I have a very deep respect to the faculty or the audience, today's audience, namely the faculty members of various colleges. A warm good evening to one and all. Today is, I would say, a special day for me, very special day for me, because I am getting an opportunity sponsored by the Ernakulam branch of ICAI to interact with the most respected group of professionals in the society, namely the teachers. So I consider it as my privilege and a proud moment to interact with a group of my own colleagues in the field. Let me just tell me a few words about my professor. My turning point in my life towards this profession, CA profession, is also associated with my teacher only. My professor in college, the Professor P. John Matthew sir, he was the head of the Department of Commerce in Udavur St. Stephen's College. So he was the guide, steering member for me towards this profession, CA. Along with that, with my passion, I am joining the other side also, that is as a faculty for the college students and the other faculty members itself. I hope that some of the faculty members in the audience group may be familiar with a few classes which I have taken in some of the colleges in and around Ernakulam. So for them also a warm welcome to this gathering. Let me just move on to my duty, that is talking about, it's nothing but interaction only. It is interacting with you people only, the various aspects of the most important topic in GST. Nothing but the input tax credit. The various provisions of the act relating to input tax credit, as Deepa has rightly said, the apportionment of the credit, the reversals. So many people are conversant with the provisions, but let me just start with the basics of that subject. I hope it is okay for everybody now. I'm just starting my presentation slides. Is it yeah, 1 second. Yeah, is it visible then?
Yes, sir.
Yes.
It's visible.
Now it is okay. Right. We'll straight away move on to the provisions. 1 second, 1 second. Yeah. The provisions of the input tax credit. What is an ideal character of a VAT system? We all know VAT, VAT credit, such sort of technologies or terminologies which we have used in the erstwhile scenario. Ideally speaking, VAT or the VAT system should have the following characteristics. One of the important features of an essential or an ideal VAT system is that it should avoid cascading. So every moments of renovation reforms towards this end has been based on how to take away the cascading effect of the taxes. Cascading effect means tax upon tax. In order to facilitate the consumer to get the material at the optimum cost, it is essential that the cost in between, that is from the hands of the manufacturer till it reaches the consumer, it should be managed properly. We all know the cost of production is stagnant. It is static. Based on that, we are building up a number of other cost elements that includes the tax also. At each stage, the trader, the intermediary, they are paying the tax to the government. All these are getting accumulated while it reaches the consumer. So every reform in the erstwhile scenario was addressing this issue, but not to the full extent. We all know that the essential feature of the system was during the transaction chain, the value added in between shall only be taxed apart from the original cost of production. After the manufacturing stage, whatever value added by the intermediaries at their own stage of transaction need only be taxed. That should be the ideal situation. Then, being an indirect tax, the ultimate tax incidence shall also be borne by the consumer. That means the business entities in between shall be permitted to pass through the tax. They can hand over the tax to the ultimate customer. They have to. How they can pass on? How it can be passed on to the ultimate customer without much burden on it. That is how VAT system has been developed. So the erstwhile VAT system, we all know, there were VAT, SENVAT, HIS duty credit, service tax credit, all everything. So none of these erstwhile credit systems, tax credit systems, satisfied all the characteristics of an ideal VAT system. There were credits to some extent on the excise duty, on the service tax, on the VAT, we all know, and also on some of the elements of the import duty. So most of them were partially given to the intermediaries, not fully. For example, manufacturers and traders were not allowed any credit on the CST, Central State Tax. When transfer of goods takes place from one state to another state, the tax levied by the VAT authorities is CST, Central State Tax. Still it is there. To some extent, it is there. Then service provider was getting the service tax. That means he has to pay the service tax to the government, for which he may be allowed to take credit of the central excise duty if any he has paid on the inputs, but he was never allowed to take VAT credit against that service tax and vice versa also. The service providers were also not able to avail the credit portion of their tax component on input the customs duty. Special additional duty, one of the elements of the customs duty, that is basic customs duty plus countervailing duty, that is CVD plus SAD, were the components in customs duty earlier. And these SAD and CVD, countervailing duty and the special additional duty, were given as credit to manufacturers. But the service providers and to some extent the other retailers were not able to get the credit of these items. Then, in nutshell, the erstwhile system was not able to carry or to evade, was not able to give an end to the cascading effect of the taxes. What is the resultant figure or what is the resultant nature in respect of this input tax credit or the tax which the taxpayer has already paid to the government? What is the fate of that in GST law? That is what we are going to look into. I and you also know that being a subject of vast or content-wise, it may not be possible for us to cover the entire portions within this short span of time. But we will try to move on to cover the area where we have some practical applicability and where some questions are probable in nature. That is, some questions can be asked. You can also, what I would request you all to take up the questions then and there. That is very beneficial for the both of us, because I am speaking to the blank wall. I do not know who all are there on the other side, which most of the faculties may not be liking. You can have, you are very much aware of that situation. But if there is some interaction between us, either through the chat box or by any other means, that would be helpful. So indirect, that input tax credit in GST, we'll just look upon the provisions relating to the relevant definitions, apportionment of credit, eligibility conditions. That is very important. The eligibility conditions for taking the input tax credit. Then apportionment of credit, what is the need for apportion the credit? And are there still any blockage of credits in this scenario? Was it not the seamless credit which was offered by the government when the GST was introduced in the country? Was it not followed after that, after the declaration? Why there is a requirement of blocked credit, which some of us may not be able to understand? So what is there in the provision in the law with regard to those items we will look into? Then availability of the credit in special circumstances. Certain special circumstances, input tax credit is made available to the taxpayer. Ultimately, how this taxpayer, the taxable person is able to utilize the input tax credit when he makes the tax payment. These are our area of concentration. Let us just begin with some few important definitions in GST with regard to input tax credit. Input tax credit means credit of input tax. Very simple terminology. But it has been given a definition in section 2, clause 63. The same way it is displayed here. Input tax credit means credit of input tax. Then we need to know what is input tax and what is what all are the intricacies or what are the components of that element. We were given to understand that input tax credit system is a seamless flow of credit. There is no blockage, there is no welding in between, there is no hindrance in between. This is just like a river, smooth running river. One person pays the tax when he purchases the goods or services. He charges tax on his outward supplies. Inward supplies and outward supply we have already seen in the first session. So when the taxable person pays the tax on his outward supplies, he is permitted to avail the credit of or the refund of or the setting up of the tax he has paid for sourcing the material, services or the assets. So input tax credit is the system of allocating, the system of permitting the taxpayer to avail that benefit, avail the tax which he has already paid. Then what all taxes he would have paid to the supplier, his supplier for sourcing the material. Input tax is defined in section 262. It means input tax in relation to a registered person. Input tax in relation to a registered person means so many things. That is IGST paid. IGST paid means when we source the material from outside the state or from outside the country, that is not within the country, sourcing the material from outside the state, IGST is paid. Then CGST paid, SGST paid, or UTGST, or as the case may be. If it is related to a union territory, the tax levied there is UTGST. So whatever taxes the taxpayer has paid, the taxable person has paid, more precisely a taxable person. Who is a taxable person? Taxable person is a registered person in GST or a person liable for registration GST. Both of these situations make a person taxable person. So the taxable person is liable to pay tax to the government. So he is expected, or he can set off whatever tax he has paid to the supplier for sourcing the material. Those taxes which he has paid to the supplier may be IGST, CGST, SGST. Then it goes on to say, these taxes, when it is charged on the person, charged on the supply of goods or services made to him, the taxes are charged on the goods or services, that means inputs or input services, whatever it be, goods or services made to him, charge on any supply made to him. Supply is made to somebody, to the purchaser. When the supply is made to him, they also charge these taxes to him. And these taxes includes IGST, then one second, let me just close some of this. IGST, then tax payable under 9394, that is reverse charge. Under 5354, IGST on, that is IGST payable, and UTGST. These taxes include the tax paid by the taxpayer, taxable person, on import made by him, that is IGST. That also again contains the taxes which he has paid under 9394 of CGST or SGST Act. Both the sections are same in CGST and SGST. So 9394 is relating to the reverse charge mechanism category. The recipient is expected to pay the tax when he sources the material, not the supplier. Such a situation. In certain cases of purchase of materials and in certain services, this scenario is prevailing. So the tax he would have paid directly to the government, not to the supplier. That is why it says, apart from whatever tax made to him payable, then other taxes he himself has to pay are IGST on import, tax paid under reverse charge mechanism, and again tax paid under reverse charge mechanism in IGST, and the reverse charge mechanism under UTGST. So these are the taxes which are supposed to be made available to the taxable person for setting it off against outward supply liability. It also goes to say that it does not include, input tax never includes the tax paid under the composition levy. That is the definition of input tax. Let us see now input tax. What is inputs? Something is wrong with the slide. Okay. Inputs means, tax on inputs we have seen. Input means any goods other than capital goods. And not only that, this should be used or intended to be used by the supplier in the course or furtherance of business. So the inputs means whatever goods he uses in the business for the purpose of supply and for itself getting used in the course of the business. All these materials, all these goods are termed as inputs, but it does not include capital goods. Capital goods, what is the definition of capital goods then? Capital goods means goods which are capitalized in the books of accounts, that's all. It basically goods, capital goods are basically goods, but the value of that capital goods is not written off to the profit and loss account, but it is carried over to subsequent years. That is why we are capitalizing it. If any goods is capitalized in the books of accounts, then that is called capital goods. And there also, in order to get the input tax credit on that, the capital goods also should be used in the business, or it is intended to be used in the business. There is an intention only is required. That is why when a new factory is constructed, even prior to its operation, commencing its operation, manufacturing operation, that factory can avail the input tax credit on the capital goods sourced. They can take the input tax credit on the capital goods because of this definition only, which are used or intended to be used. The intention is sufficient to avail the input tax credit on the capital goods. We'll go back to see the input tax service also. Input services. Input service means is any services. Input means any goods other than capital goods. Input service means any service, but it should be used or intended to be used in the course or furtherance of business. So that is an essential requirement for the purpose of availing the input tax credit. Inputs, input services and capital goods shall be used in the business or should be there with the business with an intention to use it at a later point of time. That is why the purchases need not be sold out then and there for the purpose of availing the input tax credit. We source the material in the month of in a month, avail the input tax credit, keep the material in the stock. That is also possible. Makes the sales may not be from the purchased lot. Maybe the sale may be from other lots. Payable amount also is determined. At the end of the month, whatever be the tax payable to the government is determined based on the total sales. There is no one-to-one linkage between the purchased material and the sold out material. Only thing is that were there any sales during that period? Was it for a taxable purpose? Is there any tax liability to the government? Then against that tax liability, whatever input taxes accumulated with the taxable person can be set off. This is the basic idea of input tax credit. Now, what are the conditions for availing the input tax credit? These are the provisions which relate to the input tax credit. Section 16 to, I would say 16, 17, 18. These are one group. 19 relating to a special category. 2021 also relating to special category of input service distributor. 19 is relating to inputs sent for job worker. So this is regarding the input tax credit applicability when the goods are sent to a job worker and getting back after the job work is over. He is not selling the goods. He is giving back to the principal person, the principal trader. So 16, 17, 18 relate to all categories. 19 relating to the job work applications. 2021 relating to how the input service, only relating to service. Input service is distributed in a scenario of input service distribution phase. Then a general condition which is specified in section 41 that the input tax credit can be provisionally availed. Input tax credit can be provisionally availed. Only provisionally. Why it is provisionally availed, we will see when we look at the conditions. What is the need for such a provision? Otherwise, what would have been the fate of the input tax credit for a trader? Then another two sections, section 42 and 43, matching of this credit with the hard copy of the invoices with us, matching of this reduction in the liability by way of issuing giving discounts. What is to be done with regard to the input tax credit applicable for the discounts offered at the end of the period? At the end of it, most businesses offer terminal discounts, trade discounts. So what is the applicability of input tax credit in those circumstances? This is specifically mentioned in 42 and 43. But unfortunately, this 42 and 43 should have been done by the system itself. System is not doing that. Instead, the human being shall do it. Each and every trader, each and every taxable person shall match its input tax credit. System is exercising more and more control on the provisions rather than giving us facility for doing that matching. That is about the sections. Coming to the relevant rules for that, the procedures specified for meeting the obligations mentioned in the, or meeting the conditions mentioned in the sections. Rules range from rule number 36 to 44 continuously. Rule number 36 to 44. Again, two more rules have been introduced for the availment of the input tax credit, that is the utilization of the input tax credit. When I say availment and utilization, these two are different. Availment is different, utilization is different. Then rule 86A, when I say this rule with an A, B, C, D, etc., these are all subsequent amendments. So for the purpose of giving or exerting much more and more control, some powers have been given to the commissioner to block the credit in some situations. What all are those situations? These are some of the requirements of this study. That means this interaction. In the meantime, let us also look at the zero-rated supplies and taxable supplies. You have seen that zero-rated supply means the supplies to SEZ and exports coming under the IGST Act. Taxable supply means leviable to tax under this Act. Taxable supplies, all supplies which are leviable to tax under this Act. Levy includes, or levy means that levy is specified in section 9.1. 9.1 says that there shall be levied a tax called CGST or SGST or IGST, whatever it be, on all supply of products on the value determined under section 15 at such rates specified by the notification. And it shall be the responsibility of the taxable person to collect that tax and pay to the government. This is the levying section. So taxable supplies means leviable to tax under this Act. So you also recollect that 5-6 products are kept out of the leviability. One product, the common product, alcoholic liquor for human consumption, is specifically excluded from the definition itself, goods definition in the Constitution. That is no more a subject for the government to, or the central government to levy tax. Alcohol is not a subject unless it is modified or the Constitution is amended. Then coming to the 5 petroleum products. Levying section specifically mentions that so far as or so long as the GST Council is not recommending to include those items, that 5 petroleum products into the GST, that will also be considered as not leviable to tax under this Act. So taking together 5 products only are not leviable to tax under this Act, we can call it as non-taxable supplies. In the case of all taxable supplies, this input tax can be availed to some extent, I would say, if the conditions are satisfied. Then what all are the conditions? So zero-rated supplies, taxable supplies go hand in hand with each other. Non-taxable supplies, exempted supplies, another group. Exempted supply means I'm just recollecting only, trying to recollect that only, because you have already gone through enough on that. Exempt supply includes the nil-rated supplies exempted by notification, and that also includes the non-taxable supplies, 3 categories. So this idea must be with us for taking us forward in the learning process. So section 16 prescribes the conditions for availing eligibility and the conditions for availing the input tax credit. Conditions for availing the input tax credit. Okay. What all are the conditions for availing the input tax credit? Every registered person, that means only registered person can avail the input tax credit. The section goes to say that section 16 subsection 1 says that only registered persons can avail input tax credit. So that is understood. Subject to the conditions and the restrictions specified therein. So there are certain conditions. And also in the manner specified in section 49, that is nothing but the payment section, payment of tax. That is, it can be availed only while paying the tax to the government. This process can be done. That is availing the input tax credit. If it happens so, that is every person registered under this act and subject to the conditions and restrictions as may be prescribed, that means as per the rule and prescribed conditions. In the manner specified in section 49, there is a manner prescribed for availing the input tax credit. Entitled to take the input tax credit charged on the supply of goods or services both made to him. Somebody has charged on the purchaser, the person. So that charge can be availed as an input tax credit when at the time of making payment, if the conditions are satisfied, which is that other condition which are used or intended to be used in the course of furtherance of this business, and the said amount shall be credited to the electronic credit ledger. So many things are there. So first of all, a registered person only can avail the input tax credit. Second, it should be in the manner prescribed under section 49. The availment is as per the manner prescribed under 49. Then the entitlement of input tax credit, which is already charged on him, shall be given, or entitlement is available to him only if he uses that input tax credit in the business or for the purpose of the business. In the business means in the course of business or for the purpose of the business. And what happens to that amount? It goes to the electronic credit ledger, sits there. If we follow the conditions, then that credit will go and sit in the electronic credit ledger. We know, as commerce teachers, we all aware that there are 3 ledgers in GST, main ledgers with regard to this input tax credit is concerned. 3 ledgers are important, and those 3 ledgers are maintained by the government in the portal against the assessee. That is, it is maintained in the portal, common portal. Each and every taxpayer, each and every registered person is having that 3 ledgers. These are called electronic credit ledger, electronic cash ledger, and electronic liability register. Electronic liability register gives a balance, debit balance only, because it is a amount, it's an amount due to the government. So they are maintained, the account is maintained by the government, just like passbook, opposite balance. So electronic credit ledger and electronic cash ledger gives a credit balance, and the electronic liability register is a debit balance. When speaking in terms of the government side, on the side of the government. Yeah. Then next is subsection 2. Subsection 2. That is the most criticized section in input tax credit. What all are the conditions there? It starts with the non-obstantry clause, that is, notwithstanding anything. That means irrespective of whatever sudden elsewhere in this act or elsewhere in this particular section, subsection 2 supersedes all other conditions. Subsection 2 is the mining condition, that is the taking, that the authority. What does it say? Notwithstanding anything contained in this section, section 16, no registered person shall be entitled to take the credit of input tax unless he follows the following conditions. 4 conditions were there. First one is that he should have received the tax invoice. Why I say tax invoice? Tax invoice should have certain characteristics. Tax invoice should have certain components in that tax invoice. Specified components, specified contents. Those conditions, those contents are specified in rule number 46 when we speak about the invoice. You will get more idea about the contents of that invoice. They are specified in rule number 46 when we have the class on tax invoices. Anyway, that kind of a tax invoice must be there with the person going to avail the input tax credit. Second is that he should have received the goods or the services. And so both the conditions are met. That is, we are having that tax invoice with us. We have received the goods. Third condition is that some anomaly is there. We may not be able to digest fully the meaning of that also. Why it is mentioned like that, or why that condition is specified there. It says that the tax on the supply made by somebody else on me, on which I am availing that input tax credit, that tax, I have already handed over that tax and the value to the supplier. Another condition cast upon me is to see that he has paid the tax to the government. That means I have to avail the input tax credit only upon getting a confirmation that, or if I am satisfied with the condition that that person has paid the tax to the government, then only I am eligible to take the input tax credit, because eligibility is dependent upon the meeting the conditions. One of the conditions is that I should have actually confirmed about the payment of tax to the government. It is not limited to myself paying to the supplier. I should see that the supplier also has paid the tax to the government. Something serious. Subject to the provisions of section 41. That is why the need for section 41 arises here. That is provisional availment. Why it is so, I will say later on. The tax charged in respect of the supply has been actually paid to the government, either in cash or through utilization of the input tax credit. Somehow, my supplier has paid the tax to the government either by way of paying cash or by way availing the input tax credit with him. Somehow he should have discharged the tax liability. And the fourth one is, he has furnished the return under section 13. Who is that he here? He means myself. So I should file a return, my own monthly returns. Under section 39 means my own monthly return. I have to file that return, then only I can avail that input tax credit. So many sections are interlinked on that. So if I file my monthly return, I have to pay the tax. I have to pay the minimum cash tax, minimum amount in cash. If I want to pay the optimum amount in cash, I have to necessarily avail the input tax credit. For availing my input tax credit, I should file the return. See the vicious circle. For availing my input tax credit, I should file the return. When I file the return, or for filing the return, I have to avail the input tax credit. That is why section 41 says that you go ahead with availment provisionally. Then after availing the input tax credit and filing the return under section 39, when you look back, you can be double assured. That means you can see that you have complied with both the provisions. So one liberty or one concession the government has given is that if you are going to satisfy all the conditions listed there, you go ahead with the availment provisionally, but any of the conditions are not met at any point of time, when we look back, you are in trouble, and there is a liability for that also. These are the four conditions, important conditions. Any person who learns this input tax credit shall at least remember these four conditions. Section 16, subsection 2, clause A, B, C, and D. C clause is something difficult to manage. Based on that clause, the present chaos has arisen, or it has reached up to the Supreme Court also. It is there in the Supreme Court, and now Supreme Court has to decide what should be done on the confirmation which a poor taxpayer has to get about the payment of tax to the government by his supplier. Something serious. Anyway, these are the 4 conditions. Apart from these 4 conditions, current year, that is in 2021 Finance Act, has given us another one more condition. That is, it is not only required that you have to confirm all the, or you have to take care of all the 4 conditions. You will have to also see your one of the returns, your inward returns, inward purchase returns provided by the government. Government gives a return, a statement of your purchases. In that, there should be an entry. In that statement, there should be an entry. When we look at when we are going to discuss about the returns, we will come across that statement. The name of that statement is GSTR number 2A. In the GSTR number 2A, the entry will come when our supplier furnishes his outward statement of return, outward supply statement. When he furnishes the outward supply statement into the system will take each and every item, find out who is the purchaser with the help of the GST number. It takes those elements from the return and puts it in the respective GST numbers of the GST numbers of the purchaser. Now these things will come into our return. Download that return, see the contents of that return, check with the physical invoice we have, match it, then only we are able to take the credit. So a new provision has been introduced in the Finance Act 2021, but it has not taken effect with effect from a date to be notified. So a notification is awaited. Then only this will come into play. Otherwise, we can continue with the other provisions. But once that provision comes into force, we will not be able to avail the credit even if you have your own input tax credit invoices with us. If the entry is not there in the GSTR number 2A, we are not able to avail the input tax credit. It doesn't mean that you are losing that credit. You have to postpone till such time we find an entry in the GSTR number 2A. That means till such time our supplier files his monthly return and fetches that details into our own GSTR number 2A, we will not be able to avail the input tax credit. That is a new amendment that has not been made effective so far. Then there are some explanations also in section 16.2. There is a deemed receipt concept. We all know that there are certain situations where there are no consideration. When we learned the supply definition, one of the important criteria or ingredients of the supply is that there should be consideration. But in certain situations, in spite of the fact that there is no consideration, still some supplies will be treated as deemed supplies, schedule 1. There are 4 elements, 4 items in that schedule 1. And one of them is that, so 4 are there. Anyway, we are not going into that. There is, if there is no consideration, then where is the need for paying the tax, paying the consideration? Tax the supplier would have paid, but if he has given something free, donated, then if it is coming under the that particular schedule 1, he would have paid tax out of his pocket. Then he would not have paid to the supplier. Supplier, there is no payment needed for the supplier. So in those situations, when he avails that input tax credit, he can deem that he has paid the tax, paid the value to the supplier. That is one deeming effect. Second is, we should have received the conditions, the section 16 subsection 2 said that as per clause B, it said that we should have received the goods. Only after we receive the goods, the person who is going to avail the input tax credit receive the goods, then only he can avail the input tax credit. What happens if the goods are directly delivered to a job worker or to any other person or to a dealer or to an agent? Still, we are eligible to avail the input tax. That much liberty the system has given to us. We would have, we are taken to have received, or we are deemed to have received the goods, even if the goods are directly delivered at the premises of the job worker on my direction. So I am expert, or I am deemed to have received the goods. Another proviso in this section is that if the goods are received in lots or installments. Lot means partly. If the goods are received in lots, then we have to wait up to the last lot for availing the input tax credit. For example, if the payment, if the purchase of the goods against an invoice, I would just give you a small example. Yeah, that is different. Okay, we will come to that. Suppose if you are purchasing some goods against an invoice and the consignment is reaching us in different lots. In a month, we would have received a part of that consignment, and the next part is coming in the next subsequent month. Then only after receiving that full quantity against that invoice, against a single invoice, we are eligible to avail the input tax credit. That is another proviso. Delayed payment to the vendor. We are expected to, or we can avail the input tax credit if the four conditions are satisfied. Namely, you have received the goods, we have received the invoice, tax invoice, we have the tax invoice with us, then the tax thereon should have been paid to the government. The condition only says that the tax should have been paid to the government. Who will pay or who has paid the tax? It is not, it is silent there. So naturally, the supplier would be paying the tax to the government. Even if we are given some credit period, the purchaser is given some credit period, he will pay the tax to the government out of his pocket. We are entitled to avail the input tax credit if the four conditions are satisfied. So we will be taking the credit even without our paying the value to the supplier. How long we can continue this availment without any expenditure of ours? Only 180 days. So for 180 days, we can enjoy that benefit at the cost of somebody else. On the 181st day, 181st day, we have to reverse the credit if we are not paying the value and the tax to the government. If you are paying not to the government, to the supplier. Supplier has already paid to the government, so we need to pay to the supplier. If the purchaser is not paying the value along with the tax to the supplier, whatever input tax credit he has availed on the non-payment of the value and the tax, the person who has already availed shall reverse that credit along with interest. That is another provision. So the Finance Act, new provision has been introduced, condition, AA condition. So now there are 5 conditions. One is said to be made effective. Details of the invoices or the debit notes referred to in clause A, that is the tax invoice, has been furnished by the supplier in the statement of outward supplies return. And such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. That is the GSTR number 2A. That is the new provision. Then, as regards the availment of input tax, one more restriction is there. Taking this condition into note, this rule was already there. The government was intending to put an end to the non-filing of the return by the supplier and availing the credit by the purchaser. The government wants to put an end to that process. Bogus invoicing, non-payment of tax cases. We would have read in newspaper that scams are going on. So government is trying to put an end to those anomalies. That is why, as and when needed, government has been giving us rules, but there are no provisions in the section. This particular rule is actually overruling the sections. That is why this particular ruling is reaching the Supreme Court. The contention of the assessee is that we are not able to identify whether the supplier has paid the tax to government or not. There is not a proper mechanism. The system should have controlled that or should have taken care of that. Instead, why they are penalizing the purchaser? So they have introduced a rule, that is rule number 36, sub rule 4 says that input tax credit to be availed by a registered person in respect of input service, goods or services sourced only up to that quantity and value available in the GSTR number 2A. If it is available in GSTR number 2A only, he can take care of the, or he can take the input tax credit. But what happens if I have more invoices with me, but the GSTR number 2A does not have that much invoices or that much volume of input tax credit there? they are giving some cushion that if the statement, that is GSTR number 2A, and the physical invoice with us has substantial gap in between, you can avail 5% more than the amount available in the GSTR number 2A. 5% only. Earlier it was 20%, then 10%, now it is 5%. And once we get this notification issued, made the provision effective, we cannot avail anything except the figure available in the GSTR number 2A. So this 5% also will go off within a short span of time. Whatever is available in the GSTR number 2A only is eligible for availment as ITC. This is explained in the form of this example. That is, I have with me 10 lakhs worth of ITC invoices. I have 10 lakhs, that is, I have invoices with me. The input tax credit available against those invoices is 10 lakhs rupees. But take a scenario when for that month, my GSTR number 2A gives me only 8 lakh rupees. So there is a gap of 2 lakhs rupees. How much input tax credit I can avail? I can avail the full value appearing in the GSTR number 2A. Also, I can avail 5% more of the value available in the GSTR number 2A. So 8 lakh is there. I can very well avail, even though I have 10 lakhs worth invoices with me. 8 lakhs I can avail, and also 5% of that 8 lakhs, whatever is available in GSTR number 2A. 5% of 8 lakhs is 40,000 rupees. So 8 lakh 45,000 only out of 10 lakhs I can avail, and the balance 1,60,000 will be carried to next month, carried to the next period. This is the scenario. 105% that availability of the input tax as per rule number 36 sub rule 4. And if I have 9,50,000 rupees, another scenario, 9,50,000 rupees in GSTR number 2A, I have a gap of only 50,000 rupees. How much I can avail? 5% more. 9,50,000 plus 5% of 9,50,000 coming to 9,97,500, that I can avail. So my loss is, or for the time being, I am deferring 2,500 rupees only. Next situation, I have 9,60,000 credit in my GSTR number 2A statement, inward statement. The 105% of that comes to 10,08,000, whereas I have only 10 lakhs of invoice with me. So that is limited to the available invoices. So even if I have a credit balance available in GSTR number 2A to the extent of 9,60,000 rupees, I can avail full invoices. That is the 35% gap only is there. And one important point is that what is the figure arriving or appearing in the GSTR number 2A? We have to filter out that first of all, taking care of the apportionment formalities, eligibility formalities, blocking of credit formalities in section 17. Take care of all those conditions, filter out whatever available in GSTR number 2A, and only eligible ITCs, because this sentence is that eligible ITC as per rule number 36. Only eligible ITC as per the conditions we can take from the GSTR 2A. We may be having huge figures in the GSTR number 2A. Suppose I am a trader, I am progressing in my business. I have just moved off from the ordinary Maruti vehicle to an standard vehicle, either Benz or something. I purchased that Benz vehicle. I have given my GSTR, that is GST number to the seller. He has issued that invoice. The car tax rate may be 28% plus 25% says 53% is the tax rate. 60 lakh rupees I have spent for that towards the cost, and almost 30 lakhs, more than 30 lakhs for the towards the taxes. So 90 lakhs, 1 crore rupees I have spent. Tax is around 30-35 lakhs. This tax will appear in my GSTR number 2A. Because I have given my GSTR number to the seller when he has raised that invoice. he will, the moment he puts up that number in that invoice and uploads his GSTR number 1, that is his household supply details, system will pick up that GSTR number and whatever tax available there in that GSTR 1, it will be automatically given to the GSTR number 2A of the purchaser. So I have that figure appearing in my GSTR number 2A. Can I take that credit? Cannot. So I have to filter out those items, take only the eligible items, take another 5% of that. That is the maximum amount I can avail. Okay, that is the next. Section 16.3, we will just move through those sections. Section 16.3 is regarding the depreciation. If that is nothing, that is the ITC regarding the capital goods. If I want to avail the capital goods, I have to ensure that the tax portion cannot be capitalized, should not have been capitalized. I should capitalize the asset net of the input tax value or the tax. Tax credit I can avail then and there. Why should I wait for another 10 years for getting back the tax credit? So one thing we have to ensure that the capitalization shall be net of the tax element. Then only we are eligible to avail the tax separately and claim depreciation separately for the balance quantity. So subsection 3 is with regard to that. Subsection 4 is the time limit, very important aspect. Time limit is how long I can take the input tax credit. I can take the input tax credit for the full financial year, no issue. I can cross the financial year also, there is also no issue for that, but how long? I can go 6 more months into the next financial year. That is very specifically section 3, then the particular section 16 subsection 4 says that taxable person shall not be entitled to take the input tax credit in respect of any invoice or debit note. That is the document on which the supply of goods have been received. After the due date of furnishing the return under section 39 for the month of September following the end of the financial year, I have financial year 2021. I have purchased the goods or I have an invoice dated August 2020. During the full financial year, I am entitled to take the credit, no issue, nobody will question. So during 2021, I can avail the input tax credit on the purchase made on 20th August. Again, after the end of the financial year, that is once financial year 2021 crosses, April 21, May, June, July, August, September, up to September, I can go ahead with availing the input tax credit of the invoice relating to the previous financial year. What is that ultimate point? Up to the return filing date for the period of September. So I can avail the input tax credit pertaining to a previous financial year till the moment I file the return pertaining to or return under section 39, that is a monthly return. I will file the return for the month of September in October only. So literally speaking, I can avail the input tax credit for that previous financial year till 20th of October, because September month return I will be filing on 20th October. Another condition associated with that, or the annual return filing date, whichever is earlier. Annual return will be filed on 31st December of the subsequent financial year only. That is subsequent period only, 31st December. So if at any point of time or any case, I am filing that, preponing the filing of that annual return to this period, then that is the end of the eligible time up to which I can avail the input tax credit. I will give an example here. Suppose the financial year 2017-18, annual return filing date is 31st December 2018 by default. September 2018 return filing due date is 20th October 2018. That is also financial year 2017-18. And after the financial year, up to the month of September 2018 is the eligibility criteria, or annual return filing due date, that is nothing but 31/12/2018. These two events are there. Which event happens first? That is the end of availing the input tax credit pertaining to the previous financial year. For example, invoice relating to 2017, annual return has not been filed. We can file up to 20. September return due date is 20th October 2018. Till that date, I can avail the input tax credit. If it is 31/3/2018, that financial end of the financial year, I can avail up to September, that is 20th October 2018, when I go to file September return. But before that, I have already filed the annual return, 20th June 2018. So my ultimate date is 20th June 2016. Beyond that, I cannot avail the input tax credit pertaining to 2017-18 period invoice. Similarly, if it is on 1st February 2018, annual return I have not filed during that period. So that has been filed only in 31/12/2019, 1 year after paying the delayed payment charges, fine, etc., late payment. But my eligibility to get the input tax credit lasts up to 20th October 2018, the due date of filing the return for the month of September. This is the example. Yes, then another important point. We may come across losses in between. This is not the loss which we are going to discuss in the blocking credit space. This is another loss. En route, while we are purchasing, we are on the way to the unit, business unit, some goods has been lost. That means lost in transit. What will be the treatment of that loss? If it is an inevitable loss, we will say that it is a normal loss in transit. Example, volatile products, oleum products. Volatile products and some petroleum products also, there are some inherent loss, evaporation loss. So those are losses of natural in nature, natural losses. Certain other abnormal losses are there in between. Something happened, some leaking, something happened in between. That are abnormal losses. In case of losses in transit, normal losses is condoned, whereas abnormal loss, to the extent of the abnormal loss, we will not be able to avail the input tax credit on the tax paid. So to the extent of the abnormal loss in transit, so there are two types of losses. One is process loss and the other is transit loss. Transit loss only I am talking about. Process loss, you need not bother about process loss, because process loss, if it is there, it is loss after putting that material into the unit for the manufacturing process. So you have already made use of that material. There is no need for any ambiguity. You can avail the full input tax credit, but transit loss is different. So some questions may arise. That is why I have just marked that also as a point. Process losses, no issue. Both normal and abnormal losses we will be able to take. So this is all about the section 16 conditions. To recollect, section 16(1) conditions, registered persons, section 16(2) 4 conditions, one more condition added. Then some provisos there in that if the material are coming in lots, only after reaching the final lot, we are able to avail the input tax credit. Second, we should have paid the tax and value to the supplier within 180 days. If it is not paid to the supplier within 180 days, whatever input tax credit we have availed shall be reversed. And what happens to that reversed input tax credit? Later point of time, I am paying the supplier. In that situation, I can take credit, recredit. I can take again the credit. And there is no limit for that availment. There is no further time limit for that availment. I can go on. Anytime I can pay and take. But I would have paid some interest on the delay in making payment to the supplier. That delay is to your cost. That interest is your cost. That is all about that section 16(2). Section 16(3) says about the depreciation and the input tax credit to be dealt with separately. Section 16(4), the time limit for availing the input tax credit. These are the 4 subsections in section 16(2), that is the 16 that are the conditions for availing the input tax credit, read with rule number 36 and rule number 37. Rule number 36, rule number 37. Rule number 36, the ingredients of the, I am not looking into that rule at all. I will just say that because of the positive time, I have only 1 more hour left, hardly 1 more hour. Then that is that is rule number 36. Rule number 36 is regarding the invoice, which is pertaining to the what all documents I can take input tax credit. I can take input tax credit based on the tax invoice, based on the supplementary invoice, based on the debit note, based on the bill of entry if it is available, based on the self-generated invoice. If I have generated some invoice as a reverse charge mechanism supplier, or purchaser. Then all these are coming under the documentation category. Then the document should have certain contents in that in order to call it as tax invoice. And similarly, some relaxations are also there. So that is all about the rule number 36. Rule number 37 is for reversing the credit when there is a delay in payment to a supplier. We have seen under section 1, that is under that proviso to subsection 2, it says that within 180 days you will have to pay. On the 181st day, rule 37 says that on the 181st day, I have to reverse. Seeing that I have not paid that amount to the supplier, I have to reverse that credit whatever availed with interest. And it should be treated as a liability of the person who has availed the input tax credit without making payment of the value to the supplier. So 37. These are the two rules associated with that. Now we are moving on to the most important section. I would say all the three sections are important, but little more. We have to look into the apportionment of credit and blocked credit. Apportionment of credit, I will only say that four things we'll have to just see. One is 17.1 says that if the input is used for both taxable and non-business purposes, business and non-business purposes, I have purchased 2 mobiles for the purpose of the business. I can avail credit on the mobile because it is used for the business. One mobile I have given to my daughter for her studies. Only one mobile is used in the business. I cannot take input tax credit on the one which I have not used for the business. That is, I have given to my daughter for her studies. Non-business purposes, I cannot avail input tax credit. Then, where the goods or services that is are used for, the inputs are used for, goods or the services or the capital goods are used for meeting the outward supplies which are not taxable, which are exempted. So the basic corollary or basic principle is that the input tax shall be used for making an outward supply of taxable in nature, taxable supplies. So one-to-one correlation is not required. You can avail the input tax credit. But it again goes to say that if we are using that input tax credit and we have availed that input tax credit and set off against the taxable supplies, still we are having some exempted supplies. For that also, I have used this input. Where will the government get the tax compensated? No. So government has said that if you are a taxable person and if you are paying taxable, if you are making taxable supplies, including zero rated supplies, no issue, and exempted supplies, the input tax credit is restricted to the taxable supplies, including zero rated supplies, and we have to segregate, should not avail the tax on the other element, that is the exempted supplies. Apportionment of credit, for that there is a proviso, that there is a condition, there is a manner, formula is also given. What all are the exempted supplies specifically mentioned? Certain things are exempted supplies. By default, these are to be treated as exempted supplies for the purpose of taking a ratio. That ratio we will see a little later. But what all are the exempted supplies to be included? The RCM supplies of the supplier, transactions in securities and shares, sale of land, if any has taken place in the business, sale of completed building. Sale of completed building after getting the completion certificate. These shall definitely be included in the exempted supplies for the purpose of taking a ratio proportionate, taxable and exempted. Essentially, that should be included. Then 17.4 says, for a banking company or a financial institution or a non-banking financial concern, they are in the business of finance, buying and selling of currencies, giving deposits, loans or advances, accepting deposits, etc., for which interest is paid as the consideration. They are engaged in that activity. So they have a lot of transactions. They can have an option. They can choose an option that if they are opting for utilizing or availing 50% of the eligible input tax, eligible, again I am reiterating that, eligible input tax credit, then they need not bother about these provisos, these formalities, proportion calculation, etc. 50% avail, balance 50% shall lapse. That will not go. That will not be eligible. So exempt supplier definition, that is okay. We are coming to the blocked credit. So section 17(1), business and non-business. 17(2), exempted and taxable supplies bifurcate. 17(3), what all things should be there in the exempted supply for the purpose of calculation of the ratio. Taxable is to exempted. Fourth one, banking company. Only 4 subsections are there in section 17(4). Section 17. In that group, that is apportionment of credit group. Coming to the blocked credit. On what all elements we cannot avail input tax credit? Blocked, the blockade, the availment of input tax credit is blocked. First is passenger motor car, passenger vehicle. I buy a passenger vehicle for, even if it is used fully for the business, I cannot avail input tax credit unless it is having seating capacity of 14, more than 13, that means 14. At least 14 seating capacity must be there in that vehicle, including the seat of the driver. That is one driver plus 13 passengers, 13 plus 114. If that vehicle is having 14 seating capacity, then I can avail input tax credit on that vehicle, passenger vehicle, provided it is used for the business, for the purpose of the business, for the purpose of the business. All other vehicles, passenger vehicles, are restricted from, blocked from availing input tax credit by the owner. But there are 3 categories of vehicles on which input tax credit can be availed, even if those vehicles are having less than 14 seating capacity. Those are: 1, driving school. They are purchasing the vehicle for imparting training on the motor vehicle. They can avail the input tax credit on the passenger vehicle purchased. Taxi operation, transportation of passenger business. They are in the field of, they are doing the passenger transportation service. They are in that activity. Their business is that. They can avail input tax credit on the small vehicle. Fourth one, person who is dealing in motor vehicle. That is their stock in trade. So the car dealer can avail input tax credit on the car purchased and against the sellings. So these 3 group of people only can avail input tax credit on the passenger vehicles. Coming to the goods vehicle, no restriction. Any goods vehicle, if it is coming under the goods vehicle category of the Motor Vehicles Act, you cannot change a passenger vehicle into a goods vehicle and avail the input tax credit. No. If it is coming under the Motor Vehicles Act definition as a goods vehicle, you can avail the input tax credit, no restriction. Similar is the case with the aircraft and the ship also, vessels also. The same provisions are applicable. Transportation of the goods, all the vehicles are available. Passenger transportation service, most of the aircrafts are in that field only. They can avail the input tax credit on the aircraft they purchase. There is no restriction for the transportation of the goods also. Then coming to some other expenses. Yes, I am just skipping that example because even if that car is used for the used by the managing director of the company. Company is offering car. It is a high-end car. So managing director is using that car. It is for the purpose of managing director is for the business. 24 hours he must be there, either at the business place or at somewhere. He is responsible for everything. So the directors and the top management, they are using the vehicle for their business purposes exclusively with the driver and all. Can the company avail input tax credit? No, because that restriction is there. Then other expenses incurred by the firm or the company or the business unit for personal consumption. I am taking all the things together. For the personal consumption of the employees or anybody for that matter. Just like food and beverages. First item is food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. One category. Food and beverages, one category. Sorry, food and beverages and outdoor catering is one category. If avails these services, there is no question of availing the input tax credit. If you get those, food is supplied to the employees, then that on that food, input tax credit cannot be availed. Okay, then beauty treatment, health service, cosmetic and plastic surgery. Sometimes the business is of such a nature that this is an inevitable part for the business to survive. They have to give beauty treatment to their artists, then health service to their employees if they are in hazardous industry. Cosmetic and plastic surgery sometimes may be required. Those things, because it is the intention is that personal things shall be kept out of the business. There is no such requirement, but law says that even if it is used for the business, cannot avail the input tax credit on these aspects. Then leasing, renting or hiring of a motor vehicle for the purpose of the business, not possible. Leasing, I hired a vehicle for going to bank and all for a visit to a client. I cannot avail input tax credit on the rented out car taken on rent. Then membership of a club, fitness center, etc. That is also treated as personal expenses. Even if the company is giving or if the business unit is giving the membership fee directly to the club, gets the membership assured for the directors or the employees, no question of taking input tax credit on the tax paid. Travel benefits just like that. Travel benefits extended to the employees on vacation, such as leave travel. In certain industries, it is required, it is compulsory that the employees go on leave for 5 days in a year, compulsorily, out of business scenario. So two possibilities are there. One, the company will make all the arrangements for their stay and the travel. Otherwise, the company may ask them to give the bill. Company will reimburse. In whatever be the situation, the input tax credit on those arrangements cannot be availed. But this is relaxed to some extent that all these are available. All these will be entitled for input tax credit if it is obligatory on the part of the employer to provide these services as a matter of law. That means if the Factories Act says that it is compulsory for, it is customary for, it is compulsory, mandatory for the company to provide lunch facility, canteen facility to the employees if there are more than 250 people working there, then they can avail the credit on the food supplied by outsider to the factory for the purpose of distributing or giving to the employees. For this, all these expenses will be allowed. Tax on all these items will be allowed if it is obligatory under any law for the time being enforced. Okay. Then coming to the blocked item, works contract and works contract, we know it is a service. In works contract, both the material and the labor are coming to the owner. Works contracted gives the ownership to the person who is engaging the contractor. But he is not giving that material as such. Instead, he is giving in a different form. Ownership of all, the title of all the goods are being transferred to the person. Even if it is transferred, even if it is in possession of the person owner, he cannot avail input tax credit. So the owner of immovable property, works contract is for the on the immovable property. The definition of works contract is that certain things, construction, building, etc., on an immovable property. If it is a works contract, the input tax credit availed or input tax credit is not tax paid to the contractor for availing his service is not eligible as an input tax credit item. So in order to overcome that difficulty, what happens is that if the owner of an immovable property, he sources the material on his own and he gives a contract for the labor part only, it is not a works contract. It is not a works contract. But still, clause number D safeguards that. It says that even if the owner of the immovable property, the proposed owner of the immovable property procures the goods on his own in his name with his invoice, etc., and he gives only a labor contract, he cannot avail the input tax credit on the material. So C and D ruled out such two clauses. Works contract in any whatever manner is ineligible credit. But remember, the works contractor is a service provider. He is a service provider. If he buys the goods in his name and gives us a works contract, he can avail input tax credit because he is providing a works contract service. He sources material, inputs and services for that works contract service. He is the person who gives a works contract service, he can avail input tax credit, but the owner of the property cannot avail the input tax credit. That is the difference. Okay. Then definition of works contract, etc., plant and machinery. But this is available construction services. That works contract, if it is for the construction of a plant and machinery, that is eligible. Except where the input services are for the other than plant and machinery. Yeah, works contract services when supplied for construction of immovable property other than plant and machinery. So plant and machinery, the immovable property, the disallowance is on that immovable property which is in the nature of a civil structure, buildings and other civil structures. Plant and machinery, there is a definition for the plant and machinery. What is that plant and machinery? Means apparatus, equipment, machinery fixed to earth by way of structural support or foundation. If that is a situation, that civil work is entitled for input tax credit because it is used for fixing a plant and machinery which is eligible for input tax credit. So plant and machinery means any apparatus, equipment or machinery fixed to earth by foundation or structural support. Structural support means it's standing erect. Then these are used for making an outward supply. Those items are eligible. And ineligible items are the immovable property other than plant and machinery. Similarly, telecommunication towers are also ineligible. Even though the telecommunication tower is one of the most important capital assets of the mobile company, those capital assets are ineligible for input tax credit to him. Also, for a factory, just like a petroleum industry, pipeline is one of the most the high valued items in the balance sheet. Pipeline, structure pipeline. Those pipelines within the factory eligible for input tax credit, whereas pipeline stretching outside the factory limits is not eligible. Factory pipelines outside the factory premises. That is an important item for this input tax credit. That is, plant and machinery is eligible, but other civil structures are not eligible. Even if a civil structure, a building is inside the factory, that building is ineligible because it is a civil structure. In order to control the machinery operation, if we have a control house there, control station, control panel, it is housed in a civil structure. That civil structure is also ineligible, but there are disputes on that. So taking care of that, that a difference of different views are also there. But as per the definition, all the civil works are ineligible for input tax credit. Even if a factory shed, a warehouse inside a factory, these are all that is rest house, restrooms, etc. Then shelters for the casual workers. All these are civil structures ineligible credit. Other items and E to H category A, B, C, D. That is 17.5 starts from A to I. D up to D we have completed. Then E, goods and or services on which tax is paid under section 10. Section 10 means composition dealer. Composition dealer is ineligible, is not eligible for taking credit. Whatever tax is paid, he has paid as a reverse charge mechanism person also. He cannot avail input tax credit on the tax paid by him as a reverse charge person mechanism. He is a composition dealer. He is also liable to pay the tax if he avails something which is having reverse charge liability. He has to pay the full tax. At the same time, he is not entitled for availing the input tax credit. Goods or services used for personal consumption, that we can understand. Goods or services received by a non-resident taxable person. Yes, there are situations where the non-resident taxable persons, that is German people come over Kochi for constructing these refinery operations, construction project works, etc. They are called non-resident taxable persons. If they source the material from India, that material is not eligible for input tax credit for them. But if they import material into India and do the work here, they are eligible for input tax credit. What a corollary. See. Then This is very important. That is goods lost, stolen. We call it as 17.5H. 17.5H, goods, certain things, goods lost, stolen, destroyed, written off, or disposed of by way of gift or free sample. Lost forever. Stolen is also lost forever. It cannot be put to use anymore. Destroyed, it not says damaged. It says destroyed. That means totally destroyed, not at all usable. Went off. Taken away by the flood. That is destroyed. No input tax credit is eligible on that. Then written off. That is goods have been written off. Quality lossage or any reason, write-off, written off in the books of accounts, that is ineligible. If any credit has been availed already, you have to reverse that credit. Or disposed of by way of gift. It is, of course, you can give material to or you can gift to anybody. But ensure that that purchased material, that goods has been purchased by paying tax. You have already availed that input tax credit. If you are giving that material as a gift to anybody, sorry, reverse that input tax credit and give the gift. No issue. Free samples, very prevailing in pharmaceutical industry. Free samples. For the free samples to doctors, the relevant input tax used for that purpose, for the manufacturing purpose, is ineligible. Then any tax paid in terms of section 74 and 74, 120 and 130. 74, 120 and 130 relates to the fraud, misrepresentation, suppression of facts, etc. The trader has done or the taxable person has undergone, and a capturing, a seizing of goods, etc. take place. Fraud, that is, as a result of that activity, he happened to pay tax. That tax also is ineligible. That is 17.5. Blocked credit and apportionment of credit is over. I am very sure that you have some questions, but at present I am not able to see any questions also. Let us complete this one and we will take 10 minutes for the interactive session. Then special circumstances in which input tax credit can be earned. I am not detailing all the items there. I will give a summary that special circumstances in which input tax credit can be taken are 18.1. There are 4 situations there. Once you take a fresh registration, new registration, the moment you reach the basic threshold limit of 10 lakhs or the 20 lakhs or the 40 lakhs as the case may be, we have to apply for registration. 30 days time is given to you. Within that time, if you apply, then you will get a registration with retrospective effect. If that is the situation, I can avail the input tax credit on the stock held by me as on the date of my changeover to the taxable person. That is very first day I can avail. Very first day means that day, cutoff date. The cutoff date on which I become a taxable person. That day, whatever be the stock available with me, I can avail the stock of the inputs and input contained in semi-finished and finished goods. That's all. No capital goods. So 18.1A, new registration upon reaching the threshold limit. 18.1B, voluntary registration. Entitled to take a voluntary registration any time, but I am also eligible to take the input tax credit not from the very day I apply for the registration, but the date on which I am getting the registration. Whatever was the stock available on that day, till such time I was not entitled to avail the input tax credit because I was not a registered person. Once I become a registered person, that day whatever stock available with me, I can take the input tax credit on that stock, not on capital goods, only on stock. Third one is, that is an example also. Third one is, so far I was a composition dealer. I could not take any input tax credit on the input services and capital goods. One day I chose to opt for the normal dealer, regular dealer. Instead of composition, I found that is more advantageous for me. Then I changed my option. That day onwards, I can take input tax credit on all inputs and the capital goods. Similarly, if a person was an exempt supplier, supplier of exempted goods, Now the goods became taxable. That happens in certain scenario. If it was an exempted supply, he was not eligible for an input tax credit because the goods were exempted. From that day onwards, he becomes a supplier of a taxable goods. So he can avail input tax credit on the stock and the capital goods also. Okay, these are some of the situations where I can avail the input tax credit as a special case, but there is a limit to that. All these stock available with me shall be purchased within 1 year. That is a restriction. Entire thing. Whatever I have said in section 18.1 A, B, C, D, if I have purchased the goods and the capital goods within 1 year only, I can avail the input tax credit. In respect of input tax credit of capital goods, I have to take only proportionate. That proportion is defined in rule number 40 and 44. Rule numbers. Rule number 40. I have to take only proportionate credit of the tax paid. Proportionate credit means 5 percentage points per quarter or the 60 months duration time. Okay, anyway, in rule number 40, it says 5% of the points, 5% points per quarter. That means 1 quarter I am eligible for 5%. For 4 quarters, that means 1 year, I can take 20%. I can take 20% of the credit. That means if I have purchased the machinery within 1 year, I have to forego that 5% per quarter and take the balance. If that machinery was in use with me for 3 quarters, I have to forego 15% of the input tax and balance 85% I can take. That is a situation specified in rule number 40. Then similarly, if I dispose of a material, a capital goods, there also I have to reverse the input tax credit pertaining to the period of not utilization, future date. For that, I have to take rule number 44 and reverse it. While reversing, we have to take the duration, the lifetime of the capital goods are 60 months. So 1/60th portion for every month only is eligible. And if the number of months are say 50 months left for reaching the 60 months, then for 50 months I have to take the proportionate amount and reverse the credit. That is also mentioned in 18 rule number section 18 with respect to read with rule number 44. I am quickly completing all those things. These are all peripheral things only. Summary, utilization of input tax credit. I will take 3 to 5 minutes for that, and we will move on to the returns. So input tax credit utilization, there is a section called 49. In the first slide itself, I have said that the utilization shall be as per section 49. What is there? IGST shall be first utilized against payment of IGST credit. IGST payment, IGST credit I have to pay and utilize against IGST payable. Second and third, because there is a change in the current scenario, as per rule number 88A, rule 88A, rule number 88A, the sequence has been changed. Earlier, there was a sequence, standard. First, I have to use for IGST payment. Second, I have to use for CGST payment. Third, only I can use for SGST payment. Now it says that first is compulsory, mandatory. The input tax credit on the IGST can be spent against the IGST payable. The balance amount are there in the input tax credit kitty towards IGST can be used for CGST or SGST in any manner. No issue. But CGST credit, you have to pay only for CGST first, second IGST, third we cannot use for SGST. We all know. Third, SGST similarly, not to use for SGST. The other parameters are there. The relevant sections are 49A, 49B, read with rule number 88A. Penalty for wrong availment of credit. In section 122, there is a penalty. Penalty equal to 10,000 rupees for the tax, whichever is higher evaded. Some issues with regard to section 60 and the relevant rules are: what is the position of ITC for non-receipt of goods or services? Goods directly received by the job worker. Can ITC be availed if the tax invoice is inclusive of tax? We cannot avail because there should be separate tax should be shown separately. Then only I can avail input tax credit. Part payment to supplier, ITC is only proportionate. If the payment is part payment, for 180 days, I can avail full credit. And for the balance day, if I'm not paying, I have to reverse that credit and take the proportion on which I have paid the supply. Sub-rule 4 is beyond the powers of 43. This is beyond our own powers. Then whether the rule itself is intra-vires to section 4, that is also something to be decided legally. Okay. Then there is a formula for the proportionate calendar. I'm just leaving that formula. ABCD plus EFG, T1 plus T2 plus T3, etc. This is nothing but proportionate availment of the inputs and the input services, not capital goods. For capital goods, there is another formula specified under rule number 43. Very simple. Only thing, just to see the formula itself may be difficult to understand, but once we follow the provisions, the process, it is nothing but proportionate availment. Sequentially, it has to be arrived at. That's all. Okay. Capital goods also I am just capital goods is a different method of availing the input tax credit proportionately. Capital goods also we can avail the credit, full credit in the first instance, first month itself. No need for spreading it across. Avail the full credit in the first month. Second month onwards, see whether the goods are used here for taxable purposes. The capital goods are used for taxable purpose. No need for any reversal. If the goods are slightly used for non-taxable purpose and exempted purposes, then reverse proportionately. That proportion is based on 60 months lifetime of the asset. Job worker is okay. We are eligible to take credit. Input service distributor. Input service distributor means a distributor who is not, who cannot avail input tax credit because he is having only invoice with him. The service has been rendered at the branches level. Head office has got the invoice, services at the branches. Section 60 conditions, both of them could not fulfill. In that situation, the head office will take an IST registration separately, apart from the normal registration. On that, they can distribute the invoice and facilitate the branches to avail the input tax credit. That is called the distribution of input tax credit. Most of you must be aware, or if time permits, at a later point of time, we will discuss that. Coming to the returns. Not very elaborately I am giving a summary. Section 37, first return, that is the outward supply details. 38, 39, we are not doing at all. Though these are there in the Act, we are not doing that. Instead, in place of 39, we are filing a rule number, that is under section 39, a format different from what is originally envisaged. So 38, we are not at all doing. None of the people are, except for 1 month in the entire scenario. That is 2017-18, July 1st month only, we have furnished our inward supply details in GSTR number 2. Then monthly return under section 39. 40, first return, that is the person who takes registration and for that month or for part of that month, he has to file a return. That is called the first return, only once in lifetime. In the first return, may not be for a full period of 30 days or maybe sometimes more than 30 days. So in the first return, after filing the first return, he will be in the, that he will come in the tracker from every month. Then section 49, provisional basis we have seen, that is also applicable here in the return filing. Matching and matching of inputs and matching of the discount, that is applicable in input tax credit as well as the return filing system. Section 44, annual return. Once all the returns have been filed, a summary return giving all the details in a different format shall be filed before 31st December. That is the annual return. Final return is the one which we file when we put an end to the business. When the taxpayer, the registration ceases to exist, the taxpayer closes the business. He returns the registration. He surrenders the registration. Then a final return also shall be prepared and given, unless if it is not given, day by day, the late fee comes in. So it is a trap. If you surrender the registration, ensure that the final return is also filed. Otherwise, the late fee will accumulate just like anything. So that is a very difficult situation. 46, 47 and 48. 46 notice to return defaulters. Then 47 is regarding the late fee. What happens if the return is not filed on the due date? Every day, some amount will accrue to your return for the next month. Only after paying that late fee, we will be permitted to file the next month's return also. So that is the system control. We will just move on to what all are the returns. Just see, summarize it. I will only take a few minutes for summarizing that. Returns. There are mainly three types of returns. Regular returns, annual return, and other returns. Other returns we have seen first return and final return. Regular returns, specified category people are there, then general category are there. Specified category, we have to take care of the e-com operator returns, then TDS deductor, ISD input service distributor, non-resident taxable person, and the composition dealer. These are all categories coming under the specified category. They have to follow a different rule, format, and due dates. E-com operator means coming under section 52, that is electronic commerce operator. He is facilitating. He has to deduct the tax also from the supplier. When he makes payment to the supplier from the which has already been collected by from the customer, he has to deduct the tax. Then TDS similarly, tax deducted source. Certain people are required to deduct tax, just like municipality, panchayat, etc. Government companies, public sector undertaking, etc. They have to deduct. ISD, head office and branch, they have to file. Non-resident German people coming over India to execute some contract works, that project works. Composition dealer, section 10, they have to follow a different path. General category is the one we are now looking forward. Other category, we have only two, first return and final return. This is the summary of the returns. Section wise, content wise, formula wise, rules, format, everything different. And this is a summary of all this in one slide. GSTR 1 normal person shall be filed under section 37. Regular casual taxable person, these two category, they shall file the GSTR 1. Then GSTR number 2 also inward purchases, 3 monthly return, annual return 44, section 44. Due dates are there. Supply first one, GSTR 1 is the supply details, GSTR 2 is the purchase details, GSTR 3 is the supply details, purchase detail, payment details, summary. That is the summary. The other one are detailed item wise. Annual return is the last item, that is after the end of the financial year, before 31st December, annually they have to file. Similarly, composition dealer, they have to quarterly pay the tax, but they need to file the return only annually. Now it's a change, there is a change. So CMP 08 is the format number. He has to file, he has to pay the tax every quarterly on 18th of the subsequent quarter. He has to pay quarterly, pay the tax, but file the return annually before 30th. Due date is also there. Non-resident taxable person, only one return, GSTR number 5, once in month, or that is the due date is 20th or likewise. Then GSTR number 6, input service distributor, tax TDS deductor and TCS collector. Yes. We will now go to see a process, how the return is filed. I'll just take you through some of my friends would have already seen this. Kindly bear with me because it's a very good, useful item. We can, with this slide, we can see the process. Entire thing is covered in that process. I have one supplier, I have a purchaser and a supplier. Supplier gives invoice, purchaser gets that invoice, he accounts it in his books of accounts. We all know debit purchases, credit the supplier. When we account the purchases, segregate between purchases and the tax. Tax we have to take separately as input tax credit. So we will debit to input tax receivable account. Purchases account debit 1 lakh, GST, that is input receivable account is 18,000, total payment to be payable to the creditors. In the books of accounts, inward supply, he will post that way only he will post. Similarly, the supplier will say that this 18,000 GST is payable to the government even if the purchaser gives me or not. So 18,000 he records as his liability. into his electronic into his electronic liability register, it has to go. In his books of accounts, he has to post it as a different liability altogether. It is not forming part of his turnover. So he will account the total amount in his bank account debtor 1,18,000, turnover 1 lakh, CGST payable or SGST payable, tax payable 18,000. Like that way he posts that. Now let him post that also to them. One invoice is over, second invoice, third invoice, fourth invoice. Yes. During the month of April, these people have transacted this way. The total of that is 2,25,000 value, GST 40,500. Here also, this person will get input tax credit of 40,500. He has to pay to the supplier 2,25,000 plus 40,500 for the purpose of enabling him to take the input tax credit. Up to 180 days, he need not bother about payment at all. He can avail that input tax credit. Now, what he does, he has another purchaser. He sells to him. Now, he acts as in the capacity of a supplier. He will post into his electronic supply register. That is electronic. The entry shall go to his electronic liability register ultimately. So, he has to record these things in his liability register in his books of accounts. Ultimately, on the month end only, while filing the input tax, while filing the return only, everything will go to the system in the ledgers, respective ledger. 1, 2, 3, 4 invoices he has only given to invoice raised. So the total amount available is something 2,30,500 rupees is his turnover. 42,570 is his liability to be payable to the government. So GST payable to the government, GST receivable. This is input tax credit for him. This is the liability payment. What should he do for availing this input tax credit? He has to file a monthly return. So all the suppliers in this country will be filing the monthly return for the month of April in May 10th, on 10th day of May, next month 10th date. So they all will prepare their GSTR1 from the supply details. Look at the supply details. There are 4 invoices. He takes only 3 invoices are brought into GSTR number. 1 invoice, this particular person is not taking into GSTR1. He is preparing that. This fellow, all the 4 invoices he has included in the GSTR number 1. Where is he going to file upload? In the GST network system, GST network. There is a network portal. In that portal, all the people are having their own registration number there, GST network number. Into that registration number, if we log in, we will be displayed with the formats of all. If time permits, within 5 minutes, I can show that how online you are entering into the portal. That is also possible if time is left out. Then through GSP only we can approach the portal, because that is an inbuilt system, security system. Automatically it is there. Now all are conversant with that GSP Suvidha provider. He will facilitate, and that return will go to the system. GSTR number 1 filed on May 10th. It's going to be filed. Yes. Other person also is getting ready for filing on 10th till midnight of 10th May. Once it goes into the system, we cannot retrieve it. We cannot modify it. We cannot edit it. Gone is gone. Whatever correction required, we can do it in the subsequent month. So all the people have filed their return under section 37, GSTR number 1. Based on the return filed under section 37, all the purchases will get the information in GSTR number 2A, which I have told you some time back. Rule number 36, sub rule 4. GSTR number 2A, information is given to us. This is the 2A which is given to the supercar, that is a purchaser. For his purchases of 4 invoices, he is now getting only GSTR 2A details for the 3 invoices. He will verify that matching, section 42, personal matching. That first is matched, second is matched, third is matched. No issue. Fourth is not matching. What should I do? I have to dialogue with the supplier. If he is ready to accommodate me, he has to do certain things. Otherwise, I will lose 18,000 rupees input tax credit for this month. I will have good relationship with the, I will establish good relation with the dynamic or diplomatic relationship with that particular person. He can correct that GSTR1 already filed, but that system is also, that particular technique is also not activated now. But in the future, that will also come. If he agrees to correct that return, I can include in my purchase details this item also. I will go ahead with the availing the full item credit. Get it ready. I will file my GSTR2, that is converted into number GSTR number 2. On 15th, I will file my GSTR number, because only one purchaser is here. I am taking only one purchaser case. So I am ready to file the GSTR number 2. I am reminded of section 41, provisional ITC. You are going to avail 40,500 rupees. Ensure that you are complied with all the provisions of section 16 subsection 2. I am ensuring that warning is only given. On the next day, I have, after filing this, immediately on the next day, system will give that odd man out. One item was not there in the original 2A. I have included that also in my GSTR number 2 for the purpose of filing. That item will, the system will give an intimation to the supplier in GSTR number 1A. That item he has to verify with his records. If he accepts that, automatically whatever return he has filed earlier as GSTR number 1 should get corrected. Originally, this was the system envisaged, but after that, nothing happened. See, on 20th of the month, we have now filed GSTR number 1 first, GSTR number 2, our purchase details, which gives us the input tax credit details. Third, monthly return. There, we take the payable amount, input tax credit, makes the payment as per rule number 88A, read with the section 49(5). We make the payment. For that, we can use online payment, e-payment, everything. No manual payment. Manual payment, that is across the counter payment, is limited to 10,000 rupees only for HL and for a month. But most of us, almost all of us, should make the payment online. Once it is gone there in the system, that is, I am complying with section 41, provisional of assessment. I have complied with. We are not able to identify which thing happened first. Whether I have availed the input tax credit prior to filing of return, or I have filed the return and input tax credit second. Provisional assessment that I have complied with. On the next day, system will match. That was envisaged in section 42 and 43. System has to match the input tax credit availed already with the physical invoices he has given in the returns. He will verify everything with the inward register available with the party. Then if there is any discrepancy, send left and right notices. Then the other phase emerges, that is the adjudication process. That is all about the return filing process. Thank you very much. This is my little part of it. Now it is up to you to, I don't know whether only 3 minutes are left. Should I go to a online filing system? I can ask this. I don't know. Stop sharing. Yeah. Yes. Or I should take up some questions. Why it is not? You have micro. What to do then?
Soman sir?
Yes, what to do then? This same, the screen is, actually I am seeing the screen. Yeah, now it is over.
Yes.
Can you able to see me?
Yes, sir, I can see you very well.
But I am not able to see you.
Why?
Still, I just closed my presentation slides. Let me see.
Okay, I can see you.
Okay. But still, I am in front of my screen only. That is this presentation material.
I think probably your network connection would be a little slow, but I can very clearly see
coming.
In fact, actually on the chat, we are getting a couple of very nice feedback about your sessions. And Roy sir, I got some other few good feedbacks that the session's been very helpful to the members, to the participants, and that they're really enjoying it. Very good to know that. Ernakulam branch will be more than happy to arrange for more such FDPs in future. Thank you so much, Soman sir, for joining us this afternoon and taking the sessions. You've been great support, and not only as a faculty, but even as a person who's supporting us to conduct this program. Thank you so much for your continued
Thank
support
you.
and patronage to Ernakulam branch.
Thank you
And
very
thank you,
much.
dear participants. Thank you, dear participants, for your cooperation and participation and such attention that you have been providing and giving us feedbacks. Thank you once again.
Let me
Sir,
take my one
there's a
second.
question.
One second. Yes.
Please explain debit note and credit note. Dr. Rinsi Elizabeth is asking for that.
Debit note and credit note. Yeah. That is section 34. Section 34, subsection 1 and 2, 1, 2, 3, 4. Only 4 subsections are there. Debit note and credit note. Credit note is issued by a supplier. That both the documents can be issued only by a supplier, not by the recipient. When there is a change in the value or the tax rate, there is a change. When there is an upward revision in the value or a tax rate, the supplier shall give some give the debit note. Otherwise, if the value and the tax rate is it to be given back to the purchaser, then a credit note. I will repeat, that is, credit note is issued when there is a difference. The value has gone at a higher rate, higher value. The billed amount is more than the actual value. Then that amount shall be paid back to the purchaser. What way we can pay? We cannot modify the invoice. We can only give a credit note. So that is the credit note first issue. Second, the rate. Instead of putting 5%, I have put in the invoice 12%. So the difference amount I have to give back to the purchaser in the form of a credit note. The reverse is the debit note. So there are 4 situations in issuing debit note as in credit note and 2 situations in debit note. These are to be issued only by the supplier, unlike the erstwhile scenario, cannot be issued by the purchaser. This is a debit note and credit note. More elaborate, it can be, but positive time limits. You can give me that mobile number or the email ID. I will give the details further. Okay, then carry on. Anything else, ma'am?
No, sir, no other questions.
Yeah.
So there's something which has come on the Q&A panel. If we can just read it. Government extends GST filing date many times, but we can we claim ITC in that extended date even after expired normal limit?
Yes, yes. That means if the due date is extended, due date is extended, but if the late fee is only waived, you cannot. If there is a due date extension, you can avail the input tax credit. Otherwise, you cannot avail the input tax credit. That is, you have to stick to the statutory period, time limit. Okay. That's all, no?
Yes, I think that's all. A special thanks to Sajiman sir and Sulaiman sir also for the support that they've been extending.
Right, no.
I see that both of them are there in the session even. Yeah.
Okay, we are now. So from my part, I take this opportunity, as I said at the beginning.
I think
yes, carry on.
a lot of thank you messages coming for you, sir.
Okay, that's
Thank you.
That's nice.
Appreciation and thank you messages.
Okay.
So thank you
So
once again.
let
See
me-
you all tomorrow. Yes, sir.
One second, can I just come? That I should also express my sincere thanks to all the participants, especially to the people who have been giving me this appreciation, so that I must be more energized to provide you much in the next occasion. Thank you so much. Thank you so much for
Yes, motivating.
Yeah, right.
Thank you, sir.
Thanks to the branch also. Thanks a lot.
Bye. Ernakulam branch signing off. Thank you.
Good night. Good night. Good night.